for joining us today. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. Before we get started, let's first get a glimpse of the day's highlights. The Consumer Electronics Show kicks off this week, also providing a venue for Korean tech giants to show off to the world their latest innovations. We'll sit down with an expert to talk about concerns arising from Korea's record-long current account surplus streak as the country sees its imports sliding even faster than its exports. But first, we start with some unexpected developments from North Korea. Earlier today, Pyongyang officially announced that it successfully carried out a hydrogen bomb test. If this claim is confirmed, then it will be North Korea's fourth nuclear test, following ones it carried out in 2006, 2009, and 2013. Now, upon hearing the news, local financial markets remained jittery, and Seoul's economic policymakers held an emergency meeting this afternoon to gauge the impact of the North's provocation. For more on movements in the market and results from the meeting, we go live to our Hwang Ji-hye at the nation's central bank. Now, Ji-hye, let's first go over what senior officials discussed in the meeting that wrapped up just about an hour ago.
Temporary and limited impact is the kind of effect that they're expecting this time, seen after many other provocations by the North in the past, including previous nuclear threats, tests that you've just mentioned on the South Korean economy. High-level officials from the Finance Ministry, the Bank of Korea, and Financial Services Commission came together for this meeting. Although they agreed that the impact will not be major and will likely prove short-lived, they cautioned over short-term volatility in local markets that could be prompted by additional provocations from the North. South Korea's central bank has also held a separate meeting on the latest threat, but came up with the same conclusion, putting markets at ease. Policymakers also pledged to keep a close eye on future movements in the market and run a 24-hour monitoring system.
So amid all this, how did the market close today?
Well, despite this news from the North, local shares managed to recover the losses they saw during the day right after the story broke, with the benchmark Kospi once dipping to the 1,912 level, but closing at 1,925.43, down just over 0.25% from the previous session. The tech-heavy Kosdaq actually ended up roughly 0.5% from Tuesday at 687.27. The Korean won slid against the greenback and closed at 1,197.9 a dollar from 1,188 at yesterday's close. This was Hwang Ji-hye reporting live from the country's central bank.
Korea's foreign exchange reserves came to just shy of $368 billion in December, down $500 million from a month earlier. The Bank of Korea attributes the second consecutive month of decline to a devaluation of non-US dollar assets on the back of the appreciation of the greenback. Compared to a year earlier, the total was $4.4 billion higher. Now, the value of foreign reserves held in securities rose nearly $9 billion from the previous month, while deposits slipped for a second consecutive month by just over $9 billion. As of the end of November, Korea moved up a notch to become the sixth largest holder of foreign exchange reserves in the world. Korea's auto imports topped $10 billion last year for the first time since the country opened its automobile market in 1987. According to the Trade Ministry, auto imports soared to about $9.5 billion in the period from January to mid-December of last year, thanks to an increase in imports of sedans. Sedan imports increased by about 22% to $8.7 billion from the same period the year before, while imports of freight cars and trucks decreased by about 19%. The import uptick is also largely attributed to an increase in the number of automobiles by Korean brands, such as Renault, Samsung, and GM Korea, that were manufactured abroad and then imported. The world's largest electronics show, CES, has brought together early adopters, marketing, and tech experts from around the world all in one spot in Las Vegas. This is the place to be to witness groundbreaking tech items such as the ultra-high-definition televisions and self-driving cars. Here's our Kim Ji-yeon with more.
Korea's biggest tech firm Samsung Electronics gave the world a sneak peek of its new high-end UHD TV before its official curtain call at this year's Consumer Electronics Show in Las Vegas. Samsung Super UHD TVs have been winning rave reviews for their picture quality. The sets reduce reflections caused by ambient lighting, resulting in a sharper picture regardless of the viewing environment.
We unveiled the second generation of our Super UHD TV. We applied the latest quantum dot technology to show a more accurate and more-than-life picture quality to our customers.
Quantum dots are tiny particles that emit a different color of light according to their size. Applied to TVs, the colors are more accurate and the images are more vibrant compared to traditional LCDs. Samsung's local rival, LG Electronics, unveiled its OLED displays to boast its UHD picture quality. They also use quantum dot technology. Meanwhile, a lot of startups are also hoping to catch the spotlight, like this company that produces wearable inflating airbags.
Being at this CES is for us a big opportunity to showcase our products, to showcase our technology, and demonstrate that we can bring significant protection for people in terms in different applications.
Some 30 Korean companies are among the roughly 3,000 firms taking part in this year's CES. It'll be the place to see the latest in all things tech-related, including high-end electric cars, self-driving automobiles, and drones. The show, which runs through Saturday, is expected to draw more than 170,000 visitors from around the world. Kim Ji-yeon, Business Daily.
A major shift could come in Korea's lucrative downtown duty-free sector. If last year's 2 rounds of license judgment were the qualifiers, the finals of the so-called duty-free war are set to take place this year. Our Eunice Kim has a preview.
Who will be the new king of duty-free? Conglomerates who waged for and won the much-coveted licenses for in-city tax-free outlets last year promised to build the very best shopping centers money can buy. And with grand openings to come throughout the first half of this year, the head-on contest will intensify very quickly. Shilla iPark Duty Free and Galleria Duty Free 63, both ahead of their grand openings set for March and June respectively, have soft launch in the final weeks of 2015. And second-round winners, Tusan and Shinsegae, will unveil their outlets in the second quarter. Amid promises to stock hundreds of brands in vast, shiny, multi-level spaces, experts are watching where the so-called Big Three of luxury brands, Chanel, Louis Vuitton, and Hermes, will place themselves. A key advantage from the starting line. Who will succeed in creating the next Myeongdong? Ambition won't end at the bottom line. Each of the 4 new centers have pledged to develop tourist hotbeds, using their closeness to a KTX bullet train station, the iconic 63 building in the Yeouido Business District, and the traditional markets of Namdaemun and Dongdaemun. Failing to follow through could mean losing it all when the next licensing cycle returns in 5 years, as it was for Lotte last year. Incidentally, this round will also serve as a proving ground for the third-generation members of family-led chaebol conglomerates. From Samsung's Hotel Shilla and Shinsegae Group to Tusan and Hanwha Galleria, up-and-coming figures will play large, if not leading roles, in crafting the next level of shopping experience that could also determine who wins in the distribution tug-of-war. Eunice Kim, Business Daily.
Korea's current account surplus streak is now into its 45th consecutive month, with the country posting a surplus of $9.4 billion in November. But this is stoking concerns that it might hurt the competitiveness of Korean exporters. Take a look.
Staying in the black for the longest time of 45 months since March 2012, Korea's current account surplus for November has long surpassed the record 38-month-long surplus run from back in June 1986. But this is not all good news because the trend is reflective of Korea's so-called recession-type surplus of nearly 4 years, stemming from a faster fall in imports than exports. The surplus streak is pushing the won up against key trading currencies, leading to weakened competitiveness for local exporters. Korea's imports, meanwhile, have been tumbling along with the country's already sluggish exports due to low oil prices and feeble domestic demand. This is why analysts say Korea needs to find ways to boost demand to help correct imbalances that are limiting growth.
And to tell us more about this, Professor Kim Se-won from Ewha Women's University joins us in the studio today. So good to see you, Professor.
Pleasure to be here.
All right, so tell us more about the figures that we saw for November's current account surplus. What does this all mean?
Well, according to most recently released data, trading data, November's export was $44 billion, while import was $34 billion. So we had approximately $10 billion trade surplus. In every month, actually, in 2015, we have about this amount of trade surplus. So last year's accumulated trade surplus going to be about $110 to $120 billion.
Wow. All right, but this is not the first time that Korea saw such an extended surplus streak. Back in 1986, it actually posted a 38-month-long surplus, current account surplus streak. But then we want to know, how does the economic situation compare then and now?
Well, 1986 trade surplus was generated mostly by increased export. But today's trade surplus is also generated by decreased export, which is opposite situation. In 1986, we had the famous three lows of low interest rate, low oil price, and low Korean won's value. So these three factors together increased the export of the nation. But today, we have almost the same situation of the three lows, but background global economic situation is totally different under significant recession. So that decreased the export of the nation with more decreased import of the nation.
Now, we call this kind of surplus streak the slow growth surplus trend. Now, what are some factors that are causing this within the domestic economy?
Well, we have, as we all know, we have something industrial structure problem. Our used to be strong industries like automobile, electronics, and shipbuildings are losing their international competitiveness. So that was the major reason of that.
All right. Well, the Bank of Korea actually said, though, that November's current account surplus is the result of improved trade on back of low oil prices. Do you agree with that? And how does this month's figure compare to the previous months this year?
Well,
or last year, that is.
Okay. Well, according to previous careful studies, like 10% decrease in oil price increases 1% of the trade surplus. So technically speaking, since we have more than 50% of the oil price decrease compared to the last year, trade surplus should be increased over 5%. I'd like to point out that the negative side of the low oil price, because that gave a negative effects on shipbuilding industries and chemical industries and oil refinery industries.
All right, so if this type of current account surplus continues, then what kind of other economic problems can stem from it?
Well, other economic problems is without structural reform of the industries, we will have a continuous recession-style trade surplus. So that is long-term solution, but we do not have clear short-run solution for that.
Well, coming off from that, what other countries have large current account surpluses like Korea, and what kind of conditions are they faced with right now?
Well, China is a representative example with trade surplus without good signs of the economy. Chinese export is almost flat from 2014. So in addition to Chinese economy's structural problems of like too much strong government and not efficient market systems, they are losing their competitiveness in a kind of squeezing situation between more developed countries like Japan and Korea and less developed countries like Vietnam India.
And this all comes as its economy slowed last year and
Right.
also continues to do so this year, right?
Right. Right.
Right, all right. So do you think Korea will be able to recover, though, from its slow growth trend this year, now that we are into 2016?
Well, I'm pretty much negative on that because of the two reasons. The first is it is pretty much expected that global economy is staying under recession in 2016. And second reason is structural reform takes time in Korea. So we need to be, I think, more patient on this issue.
All right, you talked a lot about structural reforms, but there must be some other proactive measures that the government can take in order to help relieve all these conditions.
Well, as I said, structural reform is a long-term solution. And in addition, it comes with a big pain because we have to clear out some problematic companies. And in the short run, unfortunately, we do not have a clear solution, but we can build up something more business-friendly environment by governments.
All right, so most likely that we'll see the surplus streak continue for a while.
Right.
All right, thank you so much for coming in today, Professor.
Thank you very much.
And that wraps it up for today. But we'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Thanks so much for watching, and bye-bye for now.